All right, we are live. Okay, so welcome to the Yieldex case discussion. Hopefully you guys had a super awesome time doing this discussion, like we're working on this case right up like I did. Okay. Do you guys believe, because we're supposed to vote as a group, that Doug should accept the Turn Inc. offer?
For me, I don't know. I was thinking about this a lot today because I was like, that 2 million seems like a really good deal. But I don't know. For me, I wouldn't, just because there are so many things. And again, please correct me if I'm wrong too, because he wanted to be the CEO of this company, right?
From what I
Was
remember
it?
reading, he didn't really want to be.
Oh
He
shoot.
doesn't want to take the leader role. He wanted to give it to what's his name?
Shield.
Shields.
Yeah, Shields.
Oh, maybe I mixed that up for the part before. Okay, never mind. Anyways, I wouldn't, just because there were so many people counting on him. All the investors, and then Shields as well. Um, oh gosh, or is it Cosmin? Sorry, I'm terrible with names. Cosmin's the one that he's with, right? And then Shields the one that offers to buy it.
No, Shields is the one that was the VC that he got hooked up with through his angel investor, or his seed angel investor guy.
Mm-hmm.
And then I
Okay.
think Cosman's the one that was from Turn Inc. Not 100%
Mm-hmm.
sure on that.
Let me see. Oh, I found about it. It says Cosmin soon discovered, however, that Washing and his other angel investors did not favor the turn offer. Yeah, so yeah, I think, to me, if I was in his shoes, me having, the experience and the trust from all the investors and whoever other people were relying on me, um, to me, I just thought it might do more harm than good. I mean, like, it'd be good, you get the sell it for 2 million, but then it'd be hard if later, you wanted to seek help from those investors, and then they'd be like, well, you sold the company last time, so I don't know if I really want to do business with you again.
Amber, what do you think?
I didn't do the numbers of like really, calculating who's getting what between all the investors, but I don't want Cosmin to go and take the deal because I feel like, he just found this great solution and he's just been like starting it, and I want him to like go more into it and develop it and work with Shields. But again, I feel like Shields, he wants to be like 50-50, which is perfectly fine because he also wants to like go into Yieldex and really develop it. But I think that they should work it out and build the business.
Matt, what do you think?
Yeah, so I'm kind of the same lines that I don't think he should sell it. 2 million is obviously pretty enticing, just like right off the bat, but I think kind of like what Washing or whatever the guy's name is that been kind of helping him with everything was talking about how like companies that are similar have been selling for like 300 million and stuff like that. So I think he should trust in the solution that he has, and then maybe down the line try to sell or just make the business successful and make Tom Shields the CEO.
Well, I must be the lone man then. I actually chose to take the deal. So I guess I'll kind of show you. I'm pretty sure like my math is horribly off. But hold on. Where's okay. I was trying to share my screen so I could there we go. So I could show you guys. So I don't know if I did this 100% right, but I'm kind of hoping I did. But according to the according to the math that I did do, I did the table for each of the 3 scenarios, and then I calculated where was it? I calculated the value of his share of the company based on the value. And like I said, I probably did this wrong. And so I looked at the 3 different options, and even for the last one with the round C of investment, I calculated that he'd have like 2.9, just under $3 million worth of value. But then I built a spreadsheet where I could mess with like the percentage as well, like for the deal with Shields, to kind of see how much it was. And the reason why I decided to go with the turn offer is because you also have to take into consideration the time value of money, because I mean you have this $3 million or roughly $3 million here, which is pretty awesome and pretty enticing, but you don't know how long it's going to be until there's that total investment of $23 million for him to have his shares worth about $3 million. I mean, that could take 15, 20 years, could take 30 to 50 years. And with the time value of money, $3 million in the future is not worth as much as $2 million up front, less the angel investors' money, plus the preferred stock in Turn Inc. And if Turn Inc. does well and they start paying out dividends and stuff, you'll get preferential treatment because they are the preferred dividends. And so there's still that kind of stream of income, and then you can always sell your shares of stock with Turn Inc. But I kind of based my decision off of the net present value of the amounts of money. So that's kind of why I went with take the offer.
See, that's really good. I didn't know how to split up everything. I didn't spend a lot of time on the case quite yet, so I haven't really gathered all the numbers, but that's like why I haven't really had a final decision.
Well, and it's also a very selfish perspective, and like Keanu pointed out, like if he's planning on ever creating another company, building another software program to build another company, you might not have investors, at least long-term focused investors, attracted to your offer because last time you sold it pretty quick.
See, that was my other perspective too, because like if he has plans on building more businesses or doing whatever it is being associated with the investors, then I wouldn't take it. But if at that point I'm like, you know what, $2 million, I already have money in the bank still, I'm still making money and I can still do investments and make money that way, I'm just gonna relax and just chill, then I would sell. But yeah, I didn't really clarify if his future plans were. I mean, I guess that's why we would make these 2 other decisions. But yeah, that's the other point that I was thinking of too. But that was good. I liked your Excel sheet.
I spent quite a bit of time on it.
I was about to ask you. I was like, how long did it take you? No, that's good though. It put them into numbers. All the information that I was wondering.
Well, and on one of the parts of the case study, it says, mess with the numbers and try to find a better alternative. And like that, that one I showed you where it was 60-40 for the round C. Here, I'll show you. Let me share my screen again. So like here, if he were to do 60-40, if Shields went with that and they did the round C, his share of the common stock would be worth almost 3.6 million. But again, then there's the time value of money and doing a net present value. I mean, $3.5 million ain't bad, but this case study really didn't go into depth about his future plans or really what he wanted to do. I mean, it seemed like, hey, I'm bored and this is a problem I've noticed online, and I'm just hacking away at the keyboard on the weekends and when I'm home just for the fun of it, and then all of a sudden realized, hey, I actually found the solution. Maybe I'll do something with it. I don't know.
Yeah, he seems like he likes the title of being the creator and doesn't really want like leadership in a business.
All right. So do you guys have any analysis or evidence to support your reasoning behind sticking with the company? All right. Just because it says, hey, start with those who wanted to take the offer and show their evidence, and then those who are the other way, and which is actually funny because it makes it seem like it says if no one votes for that opinion, come up with reasons why he should take the offer. Okay, I don't understand this because it just says how much money will Doug receive?
He would, so if they sold the company, he wouldn't receive 2 million, right? It's 2 million for the whole company, or would that money go like just to him?
Um, it just said $2 million in cash and then 2 million in preferred stock.
Mm-hmm.
And I had that same question because, I mean, if that's 2 million in his pocket, that's awesome.
Yeah.
But if it's not, then I think he'd have to pay at least, I think it's about $300,000 to investors, his
Mm-hmm.
seed investors, or I guess angel investors.
Because the way that I felt. Oh, sorry, Matt. Were you gonna say something?
Yeah, I was gonna say because it's not 2 million in his pocket. I'm trying to find where it says it in the case study exactly, but like I try to do the math with what it said, and it'd be more like 1,400,000 in cash, and then like 1,500,000 in stock. But I'm trying to find where in the case study exactly says the numbers.
Well, in the intro part, it says, Kosman faced a difficult decision. Should he take the offer and make it quick? Oh, wait, sorry, hold on. The paragraph before that. The firm of a former colleague of Kosman offered to acquire Yieldex for 2 million in cash and 2 million in preferred stock. Like, as far as I know, it's the only place that really gives solid numbers.
Yeah, because then he mentions is like I know that if I went home, my wife would be happy about the 2 million. So like that gave me the impression that he would pocket the 2 million, but I don't think that would be true.
Well, see, the thing I was thinking is he might have to pay back his angel investors, and I think they put in like 100 grand each. So
Yeah, I don't know where it says it in the case, but in the case discussion part, under like the hints, it says that for a cash sale, he would have to give the investors 2 times their investment in cash, and that'd be for the cash, and then for the stock, he'd have to give them 25%.
oh yeah, that was in.
Oh.
Actually highlighted that paragraph. So it was each of the three contributed $100,000 with 8% interest back at to the angel investor at the time of the next round of financing. The angel investors had option to convert their loans to Series A shares at 25% discount to the new share price by Series A investors. It's on page 2. It's like the third full paragraph down. So let's see. Each of the angel investors also had the option to increase their initial investment up to a total of 156,667 per investor. So he would have had to at least pay 300,000 plus 8% interest. Let me see real quick how much that would be. Well, actually, did it give a figure on as to how much time there was between the angel investors and round A? Because I don't remember there being a time. Okay, it just says angel financing in 2006, and then early 2007 is when he started seeking venture capital funds. So I just ran, I did, hold on. I took the 300,000, multiplied it by the 8%, got 24,000. And then the figure I got was about a little over 1.6 million he'd have in his pocket. Because they never would have gotten the angel investment, or the round A investment. So they wouldn't have converted it at the 25% discount or anything.
Yeah, and I took, from my math, I took the 300 and I just doubled that. So that's why I got the 1.4, but he'd have somewhere around there.
Yeah,
Still,
that's like super enticing.
well, and with the net present value of money, that's 1.4 million.
Mm-hmm.
Which, depending on how you live, it probably won't last long. But if you're smart and invest it, I mean, but we don't know how smart he is with investing. So,
Mm-hmm.
right. So let's see. Okay. As a group, realize that it is likely that nobody had a fully correct answer to this question. Here are some hints. This must be the hints you were talking about, Matt.
Yeah.
Since half the buyout offer is cash, you need to treat it as a cash sale and give the investors 2 times their investment cash. So that would probably be 600,000, and I wonder if they would want that 8% on top of that. So it would probably be less than 1.4 million. Since half the buyout offers in preferred stock, you need to treat that portion of the buyout as stock and give investors 25% of the proceeds from the preferred shares. That would suck. Just profit sharing. Doug's payout is whatever is left after paying back his investors both cash and stock. So let's see, that'd be 1.5 plus what, 1.4 million? So that'd be 1.4 million cash plus the 1.5 in preferred stock. So that's $2.9 million. I mean, I probably should have looked at this before I went with my decision. All right, how much does Shield deserve? What percentage do you think he deserves? Do you think it should be 50-50 and established as a co-founder?
I mean, if I was Cosman, I wouldn't want to necessarily give him 50-50. Maybe something close, because, I mean, he's taking a lot of risk. I mean, you're talking about leaving a stable job to come work here as the CEO, and I'm pretty sure you're taking a pay cut too. But he also, I mean, he deserves to kind of be co-founder because he's taking kind of the idea that Cosman has, and he's now making it like a viable business with him in it. But if I was Cosman, I'd still want to be like the majority over him.
Yeah, I agree. I don't know if I'd want it to be 50-50. The closest, or I guess the most I would want to give up would be like 60-40. That's to me that'd probably be like the most.
Dang it, I forgot to mute before I cleared my throat. Sorry. I actually thought, personally, I said that he should not give him 50-50 and not consider him a co-founder. I mean, he did kind of come up with the idea and write a paper that nobody read about it. But, I mean, it was just saying, hey, here's this blank space, here's a problem. And it was a problem that, according to the case study, a lot of people had recognized, just nobody could figure out how to solve it. And I said he shouldn't be considered a co-founder because he hasn't been there since the beginning. And between the time that the company, well, the program was at its base and the company started, there'd been other employees that had been hired and working on the code before they ever went to Shields. And actually, Matt, along the lines of what you were saying, in the case study, I remember saying that he was taking a significant pay cut and coming to work for the company. But actually, I would have said I think it'd be more fair to do 60-40 just because, it is something that has bothered several programmers throughout the last decade or two, I believe. But, I mean, it was really, why can't I think of his name? the guy that founded the company. It was really him that discovered the idea. So I would think that he should be given more of the credit because it was really him that discovered the solution. Amber, do you have any thoughts?
I'm the same with the 60/40. I just like Shields from the case. It sounds like, you know, he's very experienced and also knows his knowledge in engineering, but I think Cosman should have more control because he's been spending more time with it and all of that.
So why do you guys think it is that Washing wants Doug to reject the offer from Turning?
I think the company has a lot of potential. You know, again, me trying to put myself in Washing's shoes, I definitely wouldn't want a company that has so much potential to be sold for. I mean, like if you think of it, because the other business, it it said something in the case for it selling for about 300 million, right? Or was it like 200 and something million?
I think it did say that other companies were sold for about 300 million.
Yeah, they're similar.
Yeah, and see, and I don't know. To me, it's like, well, this is a business and it has some good potential. Um, you know, Cosmin, we put our trust in you and we trust you with these things. There's so many things that have been put into this business. Um, and like, yeah, so I wouldn't want it just because it's like newer. You put so much time and effort into it and money, and to just be like to sell it at the first opportunity. I would look at that as like, okay, if we're struggling, then let's sell it. But you know, there's no indication of them struggling. Is it right? There's no indication of them struggling at all.
Mm-mm.
Yeah, and so that's what would make me not willing to sell, is because yeah, the company has great potential and you can make a lot more money in the long run.
Yeah, I agree. I just think he sees the potential in the company, and as an investor, especially, he's going to get a lot more money if the company continues on and does well compared to if they just sell now.
So I was just looking ahead, and I guess there's a part B to this case study I wasn't aware of. Should have checked it out first. Let's see. Do you think that Doug could use the turn offer to his advantage if, even if he rejects it?
Sorry, I don't mean to sound stupid, but did you say turn off?
So the offer from Turning, how do you think if he does reject it, how do you think that could be used to his advantage?
Mm. If Cosmin, oh, okay, sorry, I gotta think about this for a second. I'm just gonna mute myself.
So I was just thinking that maybe, because it is a plus that there's interest in the company, so maybe he could use it to like maybe get more funding to just kind of show them investors that the company has potential and that there's already people interested in possibly buying it. So that's kind of what I was thinking.
I was thinking about it, looking back at my numbers. Of course, this is all with the caveat of if I did this right. What is? No, that's not what I wanted to show you. So, where did my Excel sheet go? Okay, I guess it's not going to show. Anyway, if my my numbers are right, just based on the Series A funding, which hasn't even happened yet. Actually, I think it's in one of the exhibits at the end of the case study. It says it's worth roughly a little over $3.3 million, but he can actually use that as use that to his advantage when he goes to those venture capital firms and say, hey, look, this is the amount of money you guys are thinking of putting in, and I already have an offer for more than what you're giving me. So it would kind of help with the valuation of the company in order to get more investment funds, if that makes sense, at least from what I see.
Yeah, I was just thinking too. It would. I think it would create a lot more interest from company, or people could see more potential in it. I don't. Do you guys follow any stocks at all? Because
Not faithfully.
This is just like one of my current event things I like to present for one of my classes. But so Twitter, I don't know if you guys heard about this, but Twitter's stocks have been falling like really, really quickly. And what Twitter did is that they sent out rumors that a bigger company was going to buy them out, which drove their stock prices up. And then what was funny, because it got turned back on Twitter really bad, because all these bigger companies, like Sony and Google, were like, no, we're not interested in buying Twitter at all. And then after, all these bigger companies said that they're not interested, their stocks, they went down in value a lot more. And I feel that this could potentially have a reverse effect. I mean, there's no factual data of it, but I think it's important for a company, for a consumer to know that the owner of a company has faith in the company, and not just to try and sell it right off the bat when it's pretty new.
Agreed. Actually, I don't know if you guys have been paying attention, but just yesterday, HSBC, it's a worldwide bank, founded in Great Britain, just issued a red flag warning on the U.S. stock market, saying that we're about to crash. So that's awesome.
Jeez. I've been hearing a lot of, I guess you could say rumors, but predictions as well, that we might go into another recession in 2017. So that was kind of scary.
Yeah. All right. So let's see. Okay. I'm assuming I'm not the only one that did not read the B case or the C case.
There's a C now?
Yeah.
Is this all in the case
No.
study, like at the end of it?
It's in
No,
the
it's-
case discussion.
Yeah.
I missed
Oh,
those.
crap. Yeah, I didn't see that at all.
They're pretty
I just
short.
glanced over just the first few questions. I was like, oh, we'll be good. So, which is weird, because then we're all supposed to read the case B and then vote as to whether or not we should hire a guy named Barr. Yeah, let's hire a Barr. That's genius.
Let's hire him. Anyone with the name Barr is unique. It has something to bring to the table.
So actually, I was just glancing through B while we were discussing, and I actually find it funny. If you read this highlighted thing, this is talking about the equity share splits between Kosman and Shields, and he says he ultimately agreed to take 40% of the common, while Kosman held on to the remaining 60%. And then Kosman's immediately sold 20% to have cash. So it ended up turning into like a 40-40 kind of deal. And then I didn't have time to glance at C. I actually looked it up real fast, and in March of last year, I believe, at least that's when this article is, in the Wall Street Journal. Anyway, Yieldex sold for $100 million. So it was about a third less than they were saying the majority of the companies like it sell, but still, I ran numbers real quick to see how much that would be if he did the 46 or the 60-40 split, and the company was worth $100 million, and if his ownership percentage was diluted down to 15% under that scenario, he'd still cash out at over $15 million. I mean, that's not the worst payday I've ever heard of, but I mean,
that's good.
it took about what, 7-8 years. Still, I wouldn't mind making a little over $1 million a year for 8 years.
Yeah, seriously.
All right. Does anybody have anything they're just dying to add?
Nope, I don't. Oh, I had a question for you guys. There's a part, and I've been trying to find it, but I've been skimming, so I probably skipped it. But there's a part in the case where he talks about like management or leadership qualities or something. It was like on page 2 or 3. Do you guys know what I'm talking about? Is it management or building a company?
Like what part of it?
I'm trying to remember.
Is it like the question that was mentioned in the case?
Shoot, you know what? Never mind. I'll just say that I like those points that he talked about management. I'm trying to find it, but I can't focus with an iPad.
Skimming through part B, it talked about it, like reiterated how he didn't want to lead the company, like he didn't want to be CEO. Oh, there's a PowerPoint for part C.
Is this all in? I have the prep assignment open. Is it in there?
No,
it's in the case
group
discussion.
Yeah.
Like the
It's the instructions for this discussion.
Yeah, this class is just all over the place with stuff.
Yeah.
Wait, I was in the prep assignment. I thought okay.
Okay, so
Case discussion.
I'm looking. Hold on. Actually, let me see if it'll show you the PowerPoint. Okay. All right, so this is like the part C PowerPoint part. And there's only this slide and that slide. So this bar guy goes VP to Tom Shields. 6 months later, email from John Barr, VP, I don't know what that means, to Tom Shields, CEO. Tom, Doug continues to be disruptive. His salary is $170,000. He holds the title of CTO, which I should have. His team wasn't functional and has been replaced. At the board meeting today, do the right things for the company. That sounds awesome. Well, you were right. The bar guy's interesting.
The drama. Is this real, or is this just like a hypothetical situation?
I would assume this is real because pretty much
Okay.
well, not pretty much. As far as I know, all of the Harvard Business School cases are actual companies.
Oh, I thought like part B and C were just like, hey, what if this happened? What would you think about it?
Oh, well,
That's pretty cool.
part B is another PDF file, and then part C is that PowerPoint, so it could be.
Oh, okay.
Either way, man, that would suck to get fired from your own company, Steve Jobs. I mean, all right, so if there are no more questions, comments, concerns, or philosophical thoughts, I'll wrap this up. Does anybody have any?
Nope. Sounds good to me.
All right. Let the summary begin. All right, so we all voted on whether or not he should accept the Turn Inc. vote or offer. I was the only one. Everyone else said no because he could create more value through the company itself, and by building value through making a product and using it. And the case didn't really go into detail exactly what the business model would be, but we'd assume it would create a good revenue stream for the company. Let's see. We kind of broke it down. We did the math to figure out that he would with the Turner Inc. offer, he'd receive between 1.4 million in cash and then about 1.5 million in preferred stock, leaving him about 2.9 million, which wouldn't be bad. And we all agreed that it would be very beneficial at this point, especially before the Series A funding, because they could go back to the investors who were proposing about just over $3.5 million worth of value to the company. He could go back and say, hey, look, I've already got this offer for $4 million, and use that as a bargaining chip to help increase the amount of funding that he'd receive. The majority of us agreed that they should, rather than doing a 50-50 equity split with Shields, they should do a 60-40. And then we, as a group, kind of skimmed over the B section of the case and found out that was actually what ended up happening. So it was pretty awesome. And then we thought it was messed up that the bar guy was trying to fire the founder of the company from his own company. So that wasn't cool. But yeah, so that is the summary, and I will stop recording now.